second quarter. But now to another conversation as we go deeper into the second quarter of 2023, looking at the Purchasing Managers Index in the first quarter. Reports show PMI started in 53.5 points in January. Fast forward to March, it stands at about 42.3 points, with a downturn deepening in March. We also got that, big debt stock data for 2022, standing at 46 trillion. A lot of this having a big impact on the Nigerian economy. Let's talk to Dr. Yemi Kale, our chief economist, KPMG Nigeria, joining us via Zoom. Great to have you on the show. Good morning.
Good morning. Thank you for having me.
So yes, looking at that debt stock we got for 46 trillion naira for 2022. A lot of people and experts say, debt is, not a bad thing in itself. It's more about how you can handle, repayment. For you, 46 trillion, is that too much?
Well, I don't think a debt stock of 46 trillion, or actually, if you want to, probably more over 70 trillion, if we add the Ways and Means loans from CBN, when compared to comparable countries, when compared to the huge development expenditure requirements needed in Nigeria, and also when we compare it to our country's capacity to borrow in a 200 trillion naira economy, we might not consider it too much, but that's about roughly 35%. However, like you said, when we analyze it from the perspective of our poor ability to generate enough revenues from that 200 trillion naira economy, which is it ranges between 6 to 8%. And if we also consider our debt service payment ratios, where federal government debt service has ranged from about 50 to 80% for federal government revenue. Also considering the level of our growth, which is slow, which is fragile at about 3%. In fact, it's about 1% in the last since the COVID pandemic. It means your economy is growing slower than your debt accretion. So in that case, given all these considerations, it suggests that the debt stock might be too high and unsustainable, that is, given our current realities. And by the way, there's no standard definition for too much debt, but I believe the rules that apply to you and I as individuals, as businesses, with respect to debt can be applied here. So many analysts would say any debt to income ratio above 50%. In fact, most people say 35%, but I would say any debt to income ratio above 50% is considered excessive. But there's no standard definition, but I would say anything above 50% is worrying.
And definitely looking at the debt to revenue ratio at about 80%, looking at where we are, right now, there's that debate about Nigeria not having a revenue problem. Some say it's more of a spending problem. What do you think?
I think we have a debt problem. I think we have definitely have a revenue generation problem, and we have a growth problem. Revenue generation, because we have a 200 trillion naira economy and we're getting only 6-8% in terms of revenue. That's significantly lower than the 15% minimum recommended. Then you have a growth problem, because even if your 6 to 8% was the best you could do in terms of revenue to GDP, if your GDP was, for example, is 200 trillion plus 400 trillion, then the absolute amount of revenue you are getting, even at the 6%, will still be good enough. But imagine if your GDP was 400 trillion, not 200, then you have doubled your revenues, even at the 6 to 8%. So we're not growing enough. 3% is growing slower than our debt accretion. But for a country that has huge expenditure requirements, that's not enough. And we also have an expenditure problem. That's been more efficient in the way we spend our resources. Do we need as many ministries, department agencies as we have? Do we want to have that conversation about the best way to spend money? For example, fuel subsidy. Do we need every year for all the agencies to be having huge capital allocations, and not necessarily for things that are targeted towards growth and development, for computers and cars and things like that? So we have all those three problems, in my opinion: a revenue problem, a debt management problem, as well as a GDP growth challenge.
What do you think the incoming government should do at this point? There's a possibility of inheriting about 77 trillion debt if you add Ways and Means, and we still have that issue of securitizing Ways and Means. If it actually is securitized, how is this going to impact the economy, and what happens next?
Well, it might not even be just 77 trillion because there's additional debt in the state and federal government budgets for 2023. And then you also have to factor in the possibility that incoming administration at the federal and state levels might want to do supplementary budget. So the total debt budget in 2020 might even be higher than what it currently is. 7 trillion, like you said, we take our debt payment to revenue ratio to about 80%. And this is that's assuming that sorry, it could be about 80% on the assumption that we hit our revenue targets in 2023, which is also challenging, considering that even lower revenue targets in the past have not been met fully, and considering also that already in the first quarter there are suggestions that the economy has slowed down. So the ability to meet that revenue target in 2023 is going to be difficult. But so you can imagine an 80% debt payment to revenue ratio, assuming we even meet the full revenue targets in 2020. So it's really going to be challenging. With respect to what can be done, I think there are many different models to generate more revenue, models to manage debt more effectively, whether it is expanding the tax net, pulling more of the informal sector, whose economic activity contributes about 3% to revenue, but accounts for about between 30 to 40% in this 200 trillion naira economy. We can also consider better debt strategies. For example, borrowing against government financial assets rather than against the volatile crude oil sales that we currently do. There's the possibility of to boost revenue by licensing greenfield investments in various critical sectors or various equity investments in government-owned assets through their listing and so on. So there are definitely lots of options that we're not fully exploring currently that I think can be looked at. But as far as the Ways and Means is concerned, it's most likely going to be securitized. I think that's the best way to handle it. And the impact on the economy and how investors will react to it, I guess, ultimately depends on how it is structured. Nigeria might have to offer increasingly attractive terms to attract investors, especially given the current constraints investment confidence. You are aware that Moody's downgraded the country recently. So we might have to offer more attractive terms to attract investors. We also have an issue. But whatever the case is, it's going to be better than currently borrowing from the CBN at MPR plus 3%. Whatever happens with securitization will definitely be better than the current interest we're paying at the CBN.
All right, before I let you go now, what are you seeing for GDP growth in 2023 for Nigeria?
Well, considering what has gone on in Q1 already, you mentioned PMI levels going as low as 42.3 in March. That suggests the economy has slowed down in Q1. In fact, 42.3 is less than the lowest levels we hit even during COVID. So that's suggesting that Q1 actually took a hit. So once your most forecast for GDP growth, including ours, was at 3%, but this was before the challenges that the economy faced in Q1. So I think there's going to be most analysts are going to revise their 2023 growth forecast. From ours is at 3%, but I expect it's probably going to be closer to 2.7, 2.5, 2.7 now, given the challenges that we've seen in Q1 and seeing that the PMI results are already suggesting that there was a slowdown, maybe even a slight contraction of the economy in the first quarter.
All right, I guess we'll have to leave it there now, Dr. Yemi Kale, Chief Economist and Partner, KPMG Nigeria. It was great having your perspective today. Thank you.
Thank you for having me.
All right, so we'll take a break now. After the break, commodities, AFEX, commodities market update is next. Do stay with us. This is Business Morning.